Guy Fraser.
That's working. That's working.
Guy Fraser, MDS. This is a question primarily for Dr. Steinbock, though possibly Mr. Ng and Mr. Zlotowski, you might also want to comment as well. Strength of the UK, of the Swedish and the German economies. Particular reasons, sort of very brief nutshell.
Yeah. Strength of the Swedish and German economies. Any particular reasons you see behind that?
In the German case, it's strong exporting. In the Swedish case, long history of multinationals. You compare, say, Finland and Sweden. Sweden has twice as much in terms of population, but a history of multiple multinationals where the smaller Finland has only maybe 3 major clusters. Sweden has been able to extend and leverage on them. Also, conservative fiscal policy. However, in Sweden and also in Germany, these economic measures that we've seen that most informed observers in Europe might like, economists, as was pointed out also in the presentation, they are now creating a political backlash. We saw that in Sweden. We are seeing it in Germany at the state level. We most likely will see it sooner rather than later in France and in other economies. So the question is that not why they are strong now, but will that strength hold after the first political backlash has gone through?
Would either of you like to add something to that? Yeah, Eve?
No, Swedish is a very, very interesting example for us because it's one of the largest spending on GDP country in the world and the lowest public debt. So I think it's interesting to look at it as an interesting model, and it has been extremely resilient during the crisis in terms of both for companies and the macroeconomy. So I think it's an interesting economy. On Germany, yes, it's of course the GDP, the growth of Germany is extremely linked to what's happening on the world trade. And there's been recessing very much during the trade crunch, and now that the trade is booming in 2010, of course, the German economy has enjoyed. But you have to look at more deeply in the German export, and you will see that it's one of the most emerging countries oriented in terms of exports, much more than France, for example. And one of the leverage of growth for German companies has been export to China, has been export to Eastern Europe, has been export to Latin America, and they have been Turkey, for example. I mean, they have been Russia. They've been extremely active on emerging markets for a long time. So I think that explains also why the growth has been so strong. One of the issues now in Europe for Germany is the consumer, because it seems that Germany is starting to work on its 2 feet, meaning export and domestic demand. It means that the German consumer is waking up. You have a record low level of unemployment today, but not enough. There is a mystery about the German consumer, why they are so reluctant to spend. You know, they are, and in that respect, they are extremely different from French. You know, the French consumer spends whatever happens, which is in a way good. Even they can't afford it. But the German consumer, they don't spend while they can really afford it, and they have to, because now you do. One of the issues in Europe is that you do have, when you look at for example, the current account, Europe is something like almost zero. But you have a huge current account surplus with Germany, and huge current account deficits, which are almost the other economies. So that's one of the issues. Now, perhaps, in a way, like China has to rebalance toward consumption, well, Germany also has also maybe to rebalance toward consumption in order also maybe to help Europe working as a whole.
I just would like to add, for example, why German economy performance so well, because those German exports are not consumer goods. They are more very related to capital goods and equipment, all relating to the government expenditure infrastructure that was spent in many countries during the financial crisis. Now, the trouble is not just for Germany, but it is for all of us that if government spending is going to slow down or withdraw a little bit from the fixed investment, then where come the demand, aggregate demand for preparing sustaining the overall demand? It is really, we need to have some country like Germany, as well as China and other surplus countries to spend more, not in just investment, but in private consumption. It is really a great challenge to the overall economy in the rebalancing process.
I can offer some evidence on why Germans, well, I don't know why Germans don't spend money, but I agree with you, they don't. My wife is German, and I she spends money, that's right. But I go there quite frequently. I'll be going there in July, and Germans do spend a lot on their cars, and they eat a lot of cake. And beyond that, you're absolutely right, really declining to spend money. There is this very conservative mentality, and you've got to have savings in your account. And yeah, that makes a lot of sense in some instances. We have another question right here.
David O'Rear from the General Chamber. I'd like to ask Dr. Steinbach about his, I'm trying to be polite, black and white view of manufacturing, either US or China. Is that all there is? Isn't the rest of the world going to step in between as China becomes more expensive and the US becomes barely less expensive?
One comment about Germany before we end. The conservatism of Germany. If you think about the history and the Weimar Republic and what happened thereafter, hyperinflation, and also the difference between the European Central Bank and the US Central Bank, or Fed, one has a mandate, employment and inflation. The other one only focusing on the inflation, fighting it. There's a huge significance of history here. And unfortunately, when it's applied in new conditions, I think it may backfire in the long run. The austerity measures can't create growth. Now, coming to the question about the US and China issue, couldn't agree more. When we look at the currency issue, for instance, the renminbi or the dollar, or the deficit that the US has had with China, I'd like to always reframe it. It hasn't been with China, it has been with Asia. It used to be with Japan, then came other countries in Asia, and now it is with China. But actually, as you pointed out, the role of the rest of the world, if we look at the trade deficit, has gradually increased, just as a portion of China in Asia vis-a-vis the deficit has increased. I think that the problem here is that so many things are being perceived in bilateral way rather than in multilateral way. I was very concerned about the elections last time in the US because it created misunderstandings of what all of this does. If you look at the example of Apple that was mentioned, made in the USA, perhaps, made in China, perhaps. But if you look at the trade deficit numbers, it looks like China is winning here, but the benefits are actually going to the United States. So it's a far more complicated issue, and part of it has to do that we are moving sort of from an export mindset to an FDI mindset, and our data doesn't reflect it appropriately. Another problem is the political leadership. It still perceives things in a very black and white way, although they are far more complex than ever before. In the case of the US and China, I'm more optimistic in that regard, that I've seen positive developments in the past 1 or 2 years. But I've also seen companies leaving China's the first-tier cities, where you do have higher costs, higher expenses, more competition, and so on and so forth. Some of them are going to China's west and inland, where you have now preferential treatment that you used to have in Guangdong and elsewhere. And I think this is good for China, this is good for many multinationals. However, others have chosen in different industries, say textiles, Bangladesh, Sri Lanka, and so on and so forth. And you will have a mini China growing, just such as Vietnam, but you won't have the same infrastructure you find in China. So this is a trade-off. But I entirely agree with the tone of the question. This is a multilateral issue, and you can only resolve it in multilateral ways. The problem is that it's being perceived and framed in bilateral ways.
Any more questions out there at the moment? Yes, we have another one. All coming from this side of the room, so you're going to have to be quicker on this side.
I'm Alex Song from Hong Kong General Chamber of Commerce. I refer to the voting results, in which the situation ahead is very sort of spread out, all three, 1/3 each. And so this fits in very well with our rebalancing and recovery theme. The question I would like to ask each of the speakers, can you name the most important risk factor in your view, which might alter that equation over the next 6 months?
Okay, to each of the speakers, so if you could give a fairly brief response, each of you, but yeah, the biggest risk factors.
I think the biggest risk for the electronic industry is that, we are lack of support for development of innovative and technology required for the future.
for a country risk analyst, we like risks in plural. We don't like to choose one. But since you ask me to choose one, I think the most, not to be too gloomy, but the highest risk is a sovereign crisis in Europe. Because I think it would have, the issue is if it happens, it's not our scenario so far, but if it happens, it will have to do the way it will be dealt. Because behind the sovereign crisis, you do have a banking issue. A lot of European banks or US banks are very largely exposed to the European debt. And then it has the potential to create a new Lehman Brothers, which would be a monetary crisis, a run to the dollar, and then again, some issues. So it's very important that all the players here agree on a solution and on an agreed solution. I think it can be feasible because after all, the debt is highly concentrated in some big players. So, and we hope it's going to happen that way. We hope that things could happen without restructuring, but we have now to get into our scenario of possible restructuring, and then we hope it's going to be done the best way, but clearly this is one big reset. It's a very European view, but I think it can also have an impact much, much beyond Europe.